It's time now for the Gem Young Wealthcast. Brought to you by Gem Young Insurance and Wealth Advisors, a family-owned independent insurance and financial planning agency since 1947. Now, from their studio on Star Center Drive in Canfield, Ohio, here's the host of your program, Leo Daprile.
Welcome to the Gem Young Wealthcast. This is Leo Daprile. In our last part of our insurance series for this month, we're going to dig deeper into the auto, home, and commercial markets. There's a lot that's been going on over the last couple of years. In fact, my joke lately has been that there's now more, it seems to me, more commercials on TV about auto insurance and homeowners insurance than there are car commercials. So how can this be? Just 2 years ago, we had insurance companies stop writing business. Every one of you know that over the last couple of years, your auto and home insurance went up a bunch. So why are they now marketing and trying so hard to bring you back? We're not finding there to be any less rates, but I wanted to dig into this today. So I have two of my top-notch folks here. I have Denny White with us today. He's my Chief Revenue Officer, and I have Kim Cheshire. She's my Director of Operations. Hey, guys, how are you?
Hello. Good morning.
All right. Are you ready to talk about all this fun stuff?
Sure. I have a little tidbit I could interject into here.
Fire away.
Companies like that do a whole lot of that TV advertising, the machine gets to be so big where they're forced to do that because they have to attract so many new clients to replace the stuff that's going out the back door. Okay. So if they didn't do that, they'd go out of business.
Got it. So these companies that took, a lot of these larger companies that we're seeing on TV took such large rate increases. And we had a couple here in our own office at some of those companies that were taking crazy rate increases. And they did that because they, and I've been around for like forever and a day. So I've seen this movie before where insurance companies, when they start to look like they're losing money, they always seem to overreact. They overreact in terms of the pricing that they increase, because they look at this and we all see the spreadsheets that they send us and saying, you know, let me just give listeners this perspective. Insurance companies look at what they call a loss ratio. Loss ratio is the amount of premium that they take in minus claims that they pay, commissions they pay to agents, and plus their company operating expenses. They like that loss ratio to be under 100%. In 2021, especially in 2022, we had insurance companies telling us their loss ratios were 115%, some as high as 125%. And they look at this and they can't do that. Let's be honest. The rate increases were needed because insurance companies simply can't, you know, for every dollar they take in, pay out $1.15. They can't do that for long.
Inflation was pumping real hard then. So it's like they're in a situation where whatever the rate is, and now all the stuff that they have to buy you again, if your house burns down or your car gets smashed or your whatever happens, they have to buy you new stuff, and all that stuff costs more than it did last time.
Right.
Significantly more.
And Denny, you've been around it long enough. So over the last 10 years prior to 2021, insurance rates really didn't move a lot. So that was, it became, if you looked at it in terms of inflation and so forth, what auto and home cost, folks, wasn't really that significant. So for people to move insurance agencies or insurance companies, there wasn't a whole lot of that because it was, I'll call it a quiet market. And then when 2022 came around, and it's still going on, Kim, we'll get into this in a minute now that we're into 26, with the amount of the price increases, people are now paying much more attention to what their auto and home insurance costs than they did before, because some people between 22 and 26, those rates are double.
I would say, yeah, between maybe 21 and now, you've seen a doubling in your insurance rates. Combine that with the inflation and the company just needing to take, you know, this isn't a nonprofit organization, these insurance companies. Like, they're trying to make money.
Right.
So if they're not making money, what do you think they're going to do to make money? They got to crank on the rate.
Right. So, and what I want to get into, Denny, because I see this a lot in the health insurance game too, and let's just use our market. Our market's the market. All the body shops charge what they charge. The parts cost what they cost, right? Insurance companies we'll get into policy nuances a little later in the show because we want to talk about pricing. If it costs company A, on a fender bender, if it costs company A $5,000 to fix a car, theoretically, it's going to cost company B $5,000 to fix the car. Why is there such differences in what companies charge? We'll get into how companies are luring people over because, to your point you made earlier, of so much business went out the back door of these companies, and they were good with it. They wanted off the exposure. So let's be clear that when insurance companies were losing business in 22 because when they weren't making money, they weren't upset about it because they were more worried about showing they're profitable because the benchmark for insurance companies is the AM Best rating, right? And for instance, in our office, we won't represent a company that's not rated at least A and above. And there's lots of reasons for that. You know, to have an AM Best rating means it has to do with the company. It's not just their financial stability. It's their claims paying ability. It's the way the companies run. So there's all these different factors. So Denny, you speak to that for a minute, if you don't mind, of the value of an AM Best rating and how companies in 22 made the decisions they did, and part of the reason was to protect it.
Yeah, so any of these insurance companies want to keep the highest AM Best rating that they can. I mean, and like you said before, we're looking for A and up companies, mainly for the financial stability. The whole point of buying insurance and having insurance and all that kind of stuff is so that when the loss happens, that they have the money to pay. Like, imagine how mad you'd be if you're paying for all this insurance for all these years, and then you go turn a claim in, and they're like, oh, well, we don't have the money to pay it. So we want A in better companies. We have one company that's A++ rated. And anybody that took a decrease in that really should be looking elsewhere for another high quality A rated company.
And I stay away from other insurance company names for a reason. But there's a large national, well-known insurance company that lost their A rating. Mm-hmm. And I'm sure most people don't know that.
Right.
Through all of this.
Yeah, that's not something that they put on the commercial. It's like, we went from A to B.
Yeah, right. But they did. So, Kim, I know from a service point of view, the last couple of years, you've been bored out of your mind.
No.
So, especially in the past year, because I think when this all started in 22, and especially into 23 when rates were going up, for the most part, people understood. I mean, they had questions, but they understood. But now that it's going on a couple of years, I'm seeing the feedback that I get from you and your service team is people are getting price increase weary,
Yes,
right?
They are.
So give me some feedback on what those conversations are like. I mean, what are people calling for today? And it's not even large rate increases. They may be 3 or 4% cost of living increases, right?
Right.
Yeah.
3% they're coming back and asking for us to quote. You know, we had a couple companies that the premiums were already really low, and now they're trying to catch up with everybody else. They're not understanding that. I try to talk to people, if they have a $250 deductible, let's increase that. When are you going to have an accident? You're paying all this money, so let's go to $1,000. That's the normal right now.
Right. And we have a lot of companies, and there's a lot of companies in the industry that to try to keep large premium increases are making changes to the contract. For instance, they're reducing, the biggie is reducing coverages on roofs, for instance. Right? Mm-hmm. So instead of keeping, and we have another company that says we won't do that, but choke down this larger rate increase.
Right.
Right? Mm-hmm. So I want
good insurance isn't cheap.
Right.
Cheap insurance isn't good.
Right. But so Denny, here's what we face every day. So I'm glad you brought that up. Let me tee it up this way. We live in a world where you have the national direct writers, and a direct writer means that you don't have an insurance agent. And they keep promoting that they can save you either 15% or they start showing dollars on the screen. And they're pounding that advertising message. And it doesn't matter the company. They're all doing it.
It's effective.
Yes, it is.
But their scheme is they get Leo to bite on it and then write him a policy. They're hoping that he has a claim or a ticket or something like that during that first term, so that now all like the new guy discounts have fallen off, and now they get to surcharge Leo, and he can't go anywhere. So it's like they love that. Probably more specifically if he has a ticket, more so than an accident, because then they had to pay too. But that's their shtick.
And we even have a company here that has done in the past, well, they'll have, and we know the larger companies do this, where they're kind of saying, here's our teaser rate to get the business back in the door. Back to the conversation earlier where we let it go out the back door because we didn't want to be on all that exposure and we wanted to become profitable again, that they're having like teaser rates coming in, knowing there's going to be fairly significant increases over the next couple of years to price that policy back to the market that it's in.
I think that's a component. I do think that company A has a certain demographic that they're going after. It's like, let's say it's 70-year-old husband and wife with, 2 cars and a house. And in that scenario, company A will make that rate very attractive. Company B might be terrible at 70-year-old husband and wife with 2 cars and a house, but they might really like young families with young drivers. And if they think that that's profitable for them, then they'll make that rate very attractive. So I think I see more of that, like company to company, more so than heavily discounted introductory rates that fall off over time. That does happen, but I think some of it's like these companies know exactly who they want, and they'll make that rate very attractive for what they're going after.
So, Kim, I will tell you that for as long as I've been in this industry, that one of the messages insurance companies always were touting through time was, we'll get you to rate stability. We want stability in the market. We want that calmness, if you will. We want to be able to write the good business. We want to be able to keep rates rather stable. They don't have those conversations with us anymore, right? And you're seeing, Denny sees it talking to the folks from their sales department, but from an operations department, you're seeing different memos of different coverage changes.
Right.
That's not market stability, right? You're seeing different companies with different rate increases, not market stability. To Denny's point, where they're starting to segment what business they want, that creates a lot of other volatility because the 70-year-old people go, I just got this great rate on my auto and home. You should look at this agency or you should look at this company. Then somebody else calls them and that's not that demographic and doesn't fit.
Right.
So how are you guys navigating all this? Because we talk all the time about coaching people through their rate increases, right? Coaching our staff on how to talk to our clients about how they should manage a rate increase. What are you telling them?
We do look at everything. Every time they renew, if they're going up, we're looking at claims, and we tell them it's credit scores. They look at credit scores, everything.
Deductible options would be another thing.
Deductible options, if we can increase the deductible and save them a little bit of money that way, we do that. If they're already gung-ho and getting quotes from, other carriers, we have them bring them in. Let's compare what you have here to them before you go anywhere. Let's talk.
Sure.
Yeah.
And where you take the time and say, let's also walk through a claim. And that's
Right.
that's a nice non-insurance way to say, let's take a look at your contract.
Right.
That they've never read. And people don't. It's not a criticism of the consumer. It's just not fun, easy reading.
No, it's not.
So, and what I've said for years is the problem with our business is these contracts that we pretty up and call policies, they're contracts. Mm-hmm. I've been pounding that for years too, that when you sign that application, you've signed a contract and nobody reads the contract. And then at claim time, that's when that contract gets interpreted. And when people have a big problem at claim time, it's because something's not covered clearly in the contract that they never read.
Well, and that's going to the company's gonna pay that exactly as it's stated in the contract. They think that, oh, I've been with them for years. Oh, they're gonna take care of me. Oh, they're gonna do the right thing. They're gonna go exactly by what the contract says. That is their promise to pay. They're not gonna be like, oh, well, he's been with us for 20 years. We're gonna give him extra couple bucks or anything. It doesn't work that way.
Right. And even since we've represented companies for decades, we only have so much sway, if you will, at a claim, because they're saying this is how the contract reads, this is how we're going to pay. Fortunately, we've surrounded ourselves with good companies that we're not the agency that has a lot of those conversations.
Quality companies with quality insurance companies.
Right. Now, that's not to say that we don't have people that have unrealistic demands.
Right.
On what they think should be covered.
I think if you have an understanding of how it works, or you have a better expectation of what to expect at claim time. If you're shopping strictly on the price of the insurance, then these insurance companies are hoping that you don't choose this coverage or that coverage or extra this or extra that. And then when you have a claim, now you're sad because they didn't pay for it, but really you were just cheap and didn't buy it.
Mm-hmm.
So
that's one of the reasons I wanted to talk to you guys about the show, the sales and the service part of it, because once they buy it, then we're having to manage the expectation of the purchase.
The real message is like, it's something that people don't understand. And they think that, oh, I'll just go get one car insurances and one house insurances, and it's all the same. Well, like that couldn't be further from the truth. We have like in-depth conversations with people to talk about optional coverages and ways to mitigate losses before they happen, and really be proactive, creating like tailor-made policies for people that have as few loopholes in it as we can create.
So let me ask you both this question, and I don't have the answer to it. So it's probably as much conversation. So I want both of your points of view on it. I've been saying for years how important your insurance contract is. I don't think people believe that. I think if people believed it, they wouldn't be so quick to switch, and they would, and they default to price. And if it's cheaper somewhere else by $100, they move for the $100, believing it's the same contract. And even though we're saying it's not, how do we change that? How do we address that? How do we convince people that they have to look deeper when they don't want to? I don't know the answer to that. And it's been, in my opinion, I'll call it a problem that continues to grow, where people just continue to shift on price.
Even specific companies will create new products as time goes on. In when I say new products, I mean new contracts. So like when company A creates a new contract, do you think it's going to be more favorable to the policyholder or the company?
It's always the company.
Right. So like as time goes on, the contracts get worse for the consumer, and the rate might be a taste less, but rightfully so, because they're getting less coverage or less contract upside. And you'd really have to know what you're doing if you were going to bail on that. I'm not saying that there aren't circumstances, significant cost savings difference that would make you look past the contract differences. But for example, like we have some of these old Grange policies on the books. The language in the contract is very beneficial to the policyholder. They're expensive though. So if you could save a significant amount of money to go to Grange's new product, the juice might be worth the squeeze in that scenario.
But not always without. But
who knows?
And
Are we going to have a claim? Am I going to have a claim? Is my house going to burn down? Who knows? It's like, let's roll the dice.
And that's becoming a bigger and bigger problem. So from a service point of view, Kim, when you're talking to people about price, how are they receiving that? How do you answer this question? And what's the feedback you get?
Well, when they want to start taking off different things, and they do, they try to take off, well, I don't want this part, or I don't want that part. I ask them, okay, so if you had a claim for this tomorrow, can you pay it in full? Because it's not covered. And then they just kind of like, okay, now they're thinking.
Sure.
So, we want to take these coverages away. Okay, but you have to sign for that. So if anything happens, can you pay for it tomorrow out of your own pocket?
All those optional things are, the insurance company makes them optional because those are the things that people have claims on.
Right.
Thank you for
Right.
bringing that up.
Yes.
That's exactly what's going on, because you go back to the bare bones policies that we all get in the mail, and we're gonna break here in about a minute. But what I want to get into after the break is homeowners, because that's the one with more and more boogeymen under the bed.
It has
But-
the most options too, really.
Right, which we'll get into. So Kim, today, over 3 years ago, and when you're explaining the reason for rate increases, and your team's explaining the reasons for rate increases, overall, how effective are you in persuading people to, or having them understand your logic?
Well, once they understand, and we have to explain, labor cost, material cost, all of that stuff has gone up in the last couple years. They're looking at their coverage A. Oh, my house isn't worth that much. Yeah, but that's what it is to rebuild. That's where people are not understanding with their homes.
And I get that.
I think we are starting to see the light at the end of the tunnel, though. All the stuff that I read has been beneficial for 26, the flattening out, and maybe we'll see some flat rates. So
We have seen them come down a lot.
So
this
rates
year.
are
Yeah,
actually
they're
beginning to
starting
come down.
Yeah,
Okay, because they've just
or stabilizing at least.
they've overshot it. So, and then the way insurance companies work, once they hit their level of profitability, once they start getting really profitable, that's when they turn on the new business jets. That's when they turn on the heavy duty advertising, which is what's going on now. We've had, we've seen a lot of it. And we've seen a lot of the national carriers, because their stock companies talked about this on past shows, how they took large rate increases right away to protect the next quarterly earnings call or the next 2 or 3 earnings calls to do that. And now some of them way overshot. So now they have all this extra money. And what are they going to do with it? So pretty interesting stuff. We got to jump off for a break, but we'll be back. So we're here talking about the state of the insurance market. I have Denny White with me and Kim Cheshire from my office. Denny's my chief revenue officer, and Kim is my director of operations. Okay, this is Leo Daprile. This is the Gem Young Wealthcast. We'll be back after this break.
At Gem Young Insurance and Wealth Advisors, we make planning for your future simple by offering both insurance and wealth management under one roof. Our team helps protect what matters most while guiding you toward your financial goals, whether it's safeguarding your home, health, business, or planning for a work-optional lifestyle. With everything in one place, you get seamless support, personalized strategies, and peace of mind. Call Gem Young Insurance and Wealth Advisors at 330-533-7941 today to schedule your fit meeting and experience all-in-one protection and planning.
At Gem Young Insurance and Wealth Advisors, we know insurance can feel complicated and overwhelming. That's why our team is here to listen, understand your unique situation, and provide solutions that work for you. From home and auto to life, plus a team dedicated just to commercial insurance, we help protect what matters most without the stress. Don't wait until an issue arises. Call Gem Young Insurance and Wealth Advisors at 330-533-7941 to schedule your fit meeting and get the protection you need today.
At Gem Young Insurance and Wealth Advisors, we believe your financial goals deserve more than just a plan. They deserve a team. From planning for a work-optional lifestyle to managing risk and supporting your everyday needs. Our financial planners, paraplanners, and service team work together to build a strategy that truly fits your life. Planning for the future will help you make that confident financial decisions and achieve lasting peace of mind. Call Gem Young Insurance and Wealth Advisors today, 330-533-6936, to schedule your fit meeting and start building your financial future.
Now, back to the Gem Young Wealthcast, brought to you by Gem Young Insurance and Wealth Advisors. Once again, here's Leo Daprile.
Welcome back to the Gem Young Wealthcast. There we go. I'm off mute. That makes it a little bit easier. Thank you, Katie. You can't see all the work behind the board of what she's doing, but she's trying to make us look pretty, but she's got quite a mess back there, so thank you. So this is our last installment for the month on insurance and different elements of the insurance industry. And today we're talking with Denny White, my Chief Revenue Officer, and Kim Cheshire. She is my Director of Operations, about what's really going on behind the scenes and under the hood. And we spoke a lot in the first segment about the auto industry. Now I want to shift this over to homeowners, because I'm going to say the last 10 years, this has probably been the most volatile. And this was volatile before COVID. It just got worse because inflation really blew it up. And let me start with this. Last year, and the particular insurance company we have here that Kim's chosen, who am I kidding, for me, right? For my personal insurance, my homeowners, and for those of you that know me, I have a home and I have a little vacation cottage, and then my wife Kimberly's house, so there's 3 homeowners, okay? I had an average rate increase of 43%. So I know the game. I'm in the business. I saw those rate increases and my eyes popped out, just because at the end of the day, I'm still a consumer too.
So what'd you do?
I went to Kim and said, tell me what you think. This seems really large, and it was really large. And with 3 homes, it was a lot to choke down. And that's why I wanted you here. She said, okay, let's look around, just like you do with the rest of our clients when you have. So why don't you can use me as the example, what you did, where you landed.
So I just checked different other companies, put everything together, auto, home, everything that you have.
And let's be honest, I'm a little complicated, so this wasn't easy.
I know.
Right?
What happens is, okay, your auto was fine where you're at. The home's increased. But when you go somewhere else, it could be the opposite. So now your auto's way up there and your home is a little lower. So it's almost like, okay, do we stay where we are? You like the company. You always have liked that company.
Very much so.
So you ended up staying because it's overall the price wasn't much different anywhere else.
So what I want our listeners to hear is, when we were done, there was less expensive options, but the contract is so robust with features, and the claims paying reputation of the company that I chose is outstanding.
AM Best rating.
Right.
And their AM Best rating. So all of these things factored into me saying, I feel like I was getting value for my money, even though that was a big rate increase. And so it wasn't that. What I want people to hear is, my price wasn't the cheapest, but it was competitive.
Right.
You know, that's the key point. So when your auto and home is priced competitively and you're looking for cheap, to your point, Denny, what you brought up earlier, that's when it starts to get dangerous come claim time.
Good insurance isn't cheap. Cheap insurance isn't good.
And
I think the key
but
takeaway.
people don't believe that, Denny.
I think the key takeaway here is Gem Young is an independent agency. So very unlike the direct writers or the captive companies or any of the people that you see that's sending you stuff in the mail or TV ads that you're watching on TV. This place is very different than that. We represent multiple insurance companies. And
8.
In a scenario like this, we do have the flexibility of maintaining the relationship and custom tailoring insurance policies with multiple 8 different companies if things were to be even more out of whack than they were, you know?
Denny, I like to say, Kim, when things are good, you forget the value of an agent. It's just like in business. When things are good, I don't need a banker. But I make sure that I have a strong relationship with multiple bankers, because I just might need them someday. And if I don't have a relationship and I need a banker, I'm in trouble.
Well, like if your house burns down, I'm coming. You know what I mean?
Oh,
Like,
yeah. We do those things.
I don't think if you buy this insurance policy online that the call center representative is going to come to your house and console you and help you turn a claim in and tell you what to do from here. So,
Or call the carrier and
yeah,
try to get
like-
some answers.
Yeah.
What's going on? Yeah.
I've used this example in the past. I have a dear friend of mine that bought his insurance. And again, I say this all the time. These are people, this is what makes me crazy. These are people that are smart people that should know better. But it was one of the national carriers that advertises, that sends you a picture of your house with an insurance premium that's a third of probably what you're paying, because that's their bare bones product. And that's why I wanted to bring up homeowners, because they have everything stripped out. Well, this is a true story. Lives in Pennsylvania. And I've had this story before. House burnt to the ground. It was a 15-year-old house that burnt to the ground. And the way it burnt to the ground was he pulled his car in the garage after taking one of their children back to school, and it was a BMW, and the front fans to cool the engine broke, didn't know it, pulled close to the front of the garage, and there was enough heat from the engine that it caught the garage wall on fire.
Wow.
So it wasn't a maintenance issue on the house. It's not an old house with old wiring, all these things you imagine, right? When it was all said and done, that insurance company paid their policy limits. It took them 9 months for them to get to the policy limits. When he was all said and done, to rebuild his house cost him $250,000 out of pocket, because that's how underinsured he was.
Woof.
Yeah, that's what people don't think. And again, this is a very intelligent. They're both professionals. Without getting into any more than that, they're both highly educated professional people. But it came down to how inexpensive their homeowners was. He'll tell the story all day long of what a bad decision he made.
So, like here, we put on homeowners policies what's called expanded replacement costs, which would have saved the day in this scenario. It adds like 25 or 50% on top of what we have the coverage aid dwelling amount at. So that if the policy limit's not enough, there's another 25 or 50% on top of that.
But let's go back to what you said earlier before the break, when people are believing everything's the same. They may sit there and say, here's your base contract. Base contract A from company A looks like this. Base contract for company B looks like this. Where the game's being played in the homeowners market is coverages that were standard 10, 15 years ago are now options. Mm-hmm. So when you're looking at those base policies, it's all these, what used to be in your contract 15 years ago, stripped out, and you don't know it.
And I suppose in your friend's situation, the insurance company's like, oh, great. He didn't pick expanded replacement cost. So look at the amount of money the insurance company saved.
They saved $250,000. Because that's what the full claim would have cost. Mm-hmm. So I don't think people always look at it from the insurance company's point of view. They look at it and say, okay, here's my basic policy, or here's my and they're all being told they're comprehensive policies, right? Mm-hmm. We know further, and I see a lot of this advertising. So can you tell I'm getting worked up, because these are personal complaints of mine, right? With our wealth management firm, what we're allowed to say, how we say it, how we present it is very, very highly regulated. And the parallel that I give to us is people that sell gold. The stuff they say is shameful to me. And how they scare people into buying gold is just absolutely shameful. If I said the things the people selling gold did, I'd be in jail. There's no real regulation around how insurance is advertised. So they can make a lot of claims and persuade you to take different paths of thought without substantiating it.
Well, manipulate the marketing stuff too real hard. Like with those advertisements you get in the mail, it's like it's a bait and switch move,
It absolutely is bait and switch, but there's no rules against it.
Right.
Because if you came in and said, I want that basic policy, they go, okay. Mm-hmm. Their job is to upsell you. Their goal is to trigger your greed to get you to call them and then say, okay, would you like this, this, and this? Because I've talked to these guys enough where if they end up selling you that bare bones policy, they know that you walked away from something way better than what they sold you, but they don't care.
It goes back to the days of, remember, like Safe Auto, which was specialized in minimum limit car insurance. And it was always like super profitable because they were like padding the rate. But really what they were doing is they were limiting their losses because they specialized in minimum limit coverage.
Right.
So like they were making money hand over fist because these people weren't getting anything better than that.
And people didn't know because they said once it paid, and they would pay the limit and go, okay, we're done.
Right.
They'd wash their hands and
Low
say,
limit.
we honored the contract.
Yep.
Back to what we said in the first segment of the show, right? They're going to interpret that contract exactly how it is, right? Kim, do you get a lot of people asking for, I mean, because we don't do it. We won't sell state minimum because we think that's a lawsuit for us, right?
Right. I do get those questions. Well, I just want the minimum. I said, well, we won't do that because when it comes down to a claim, you hit a $50,000 car and you got 4 people in the car, you're going to pay a lot out of pocket.
Right. And then the lawsuits come back to us by, why didn't you tell me to have more?
Right.
Right.
And then with the increase of, car prices and everything right now, you definitely don't want a minimum.
Right. But we've seen people have amnesia at claim time.
Mm-hmm.
So where we would talk to them about things when they were purchasing their policy, we keep good notes. And then when that accident or something happens, they're like, well, we didn't talk about that. You didn't offer me that.
Right.
And we would say, yes, we did. It's here. And that's typically the hyper price sensitive person that starts peeling away these options. Right.
Right.
So like I said, that people in the way they're advertised to today, they fixate on price and they fixate on how much. One of the commercials the other night, save $721. And I look at that and go, that's a very specific, ridiculous number. Did they use that in their advertising because it's that specific and ridiculous that it looked believable? Did they plant the seed in your head that if you call, you're saving $721?
I mean, there's situations where I save people more than that.
Right.
That's just the advertising gimmick.
So I got to interrupt you here. We do that all the time. That's why we have 8 carriers. We're not sitting here justifying expensive insurance because we compete head to head with all these companies. Right. We are there with the value-added professional insurance agents.
I'm looking for a person that cares about these assets, willing to have like a very candid conversation with me about what they're looking for and what they expect out of the insurance company. And if I could save them a ton of money, I'm going to do it. And there's that happens plenty of times here.
Yeah, so that's the message. I don't want to get lost. We're not any more expensive, right? People perceive us to be
high quality company.
You?
Me. That's me.
You get to come see Denny.
I mean, it's just like I've been doing this for a really long time. I think I'm good at it. So it costs you no more to get me than bozo on the phone at the call center.
That's right. Mm-hmm. So I'm glad you brought that up because I'm not justifying more expensive insurance because we're not.
Right.
So what do you see? Because we've had clients, Kim, leave that maybe were more price sensitive or had a claim, and then in a year they're coming back because they didn't realize what they gave up. Right.
I actually just had one the other day come back.
Right. And what was their reason?
The billing was all goofy. They just weren't happy with the billing. I think it just kept going up and down. They really didn't. She said, I just want to come back.
Right.
I was more comfortable there.
Yeah. So,
and I mean, we have a whole office of live human beings here.
Yes.
With insurance licenses. They know what they're doing.
That's right. And everybody that talks to someone about a coverage in our office is licensed. Call centers are not.
Right.
Right.
And everybody's we have a very good staff.
Well, that's what we think makes us different. So I staff for that, it's not cheap, but that's the value that we provide. And that's where we're different. So I think that's important for people to know too.
Mm-hmm.
You know, it's funny you bring that up. I'm like thinking, are we giving the message that we're more expensive and this is why we're justified when we're not? So, because we have companies too that are doing that tiered thing too. We don't like it. You know, we tell people, you know, this, if you want to do this here, it will call it your introductory rate, but you're going up in 2 years, you know. And then the thing too, along the way, everybody thinks they can just easily move. So Kim, let's go back to that. Back in 23, there was a lot of companies that were just shut off new business. There was companies that if you weren't perfect, you weren't moved. We couldn't move you, right?
Oh, even now, even if you have a few claims, we have a company that will actually just kick you out.
Wow.
So then we have to find another company for you.
Yeah.
Some of them are very picky with claims. There's a limit on claims, and they're just done.
Yeah.
It's just
Yeah, I think some of the companies that we deal with have like accident waivers and loss waivers and some things that we can really keep them in a preferred market situation where it's like really preferred type of policy where if they look to go elsewhere, some of the stuff that they've had in the past might follow them along and they might not get as favorable of a rate with some of these other companies.
Do you know what I think part of the issue is today? And I see from the independent agent side, how many agents are rolling up into larger agencies, and it's the roll-up trend that's going on. And it's been going on solid 10 years, right?
Right.
What I have not seen roll up is insurance companies. So I personally think there's just too many insurance companies for the markets. And there's too many people competing for the same pie. And they're trying to find different ways. But like I said at the top of the podcast, you know, the cost of a claim is the cost of a claim. It doesn't necessarily vary from company to company unless in like their auto policy, they only pay for refurbished parts and not OEM parts. An option to get OEM parts, right?
Right.
Used to be part of the standard contract, right? And then you say to somebody, you know, you have a brand new car. Are you really good with aftermarket parts? And don't take our word for it, I would say to people. Call your body shop. Ask them what it's like to work with these parts. Don't take our word for it. See what they think about it, right?
Mm-hmm.
So these are all the little nuances of things that we see.
I think to go back to the agencies rolling up, like that's very real life around here. Like there have been several, probably a whole handful of like really large insurance agencies roll up to some bajillion, gazillion dollar insurance agency that was bigger than they were. Just keep that in mind. I don't think those people are going to get the same level of service that they used to have. Matter of fact, I've had several phone calls with like people that have been in that scenario that nobody answers the phone, can't get a hold of anybody there. Just like
They've sort of checked out.
Yeah, checked out.
Yeah.
a claim. You're lucky to hear anybody back. It takes them forever to get back to you.
Mm-hmm.
Well, in those situations, part of the problem is when the mega independent agencies buy you, it's a spreadsheet decision.
Right.
You know, if you only spend so much on your insurance, you're only so valuable to them, and they tailor their services to that, or not at all.
Yeah.
Or they ship you to a call center because it's less expensive for them.
Mm-hmm.
So, and I think we're starting to see more of that too, where people getting frustrated and having had enough of, you know, because not everybody wants to do everything on an app. And sometimes it's just like the airline industry's gone that way. And that there's one airline that tries to be a low cost airline. There's no phone number to call them. It's on the app or it's an email. And that's how they're trying to crunch down the price to fly. And actually, I fly them when that's my last choice, not my first choice, because I fly a lot. And when I fly, you know, not everything goes perfectly. And when things don't go perfectly, how do you fix it? So I guess I apply that same mentality to that as well.
Mm-hmm.
So what other trends, Denny, are you seeing for 26?
Hopefully I meet with these representatives from the insurance company and multiple insurance companies. And I say really what we're looking for is just stability. We're looking for some rate stability. We're looking for like, you know, a little bit of a light at the end of the tunnel. just to quit shaking it up. It's like we've had so much volatility over the last couple of years. We need some normalcy in our lives. So I think that's really, anytime anybody comes to me with me from a company, that's what I'm trying to project as to what we're really looking for. And that would help us keep some of this long-term stuff on the books. You know, if the rate was stable, people, they wouldn't go anywhere. You know, it's just pretty simple. So we're also looking, you know, we're looking for new clients. We're looking to expand. We're looking to grow. We want all that stuff. We want to do a good job for our current clients. We want to provide great service, things like that.
Okay. All right, Kim, do you want to add anything?
No.
Just pretty much.
Yeah.
If things settle down, your life settles down, right?
Yes.
Yeah, from that point
I
of view.
don't think I've ever seen it settled. I think when I started, everything started blowing up at that point. So
Back in the day,
I've never seen it actually.
Back in the day, I used to make renewal phone calls to people whose like 90% of the rate was going down.
Yeah, right. And those days are over. Wow. For now, I just want to finish with this. Remember, Kim, when I hired you, one of the complaints you had with your last job was you would get bored.
Oh, I was bored silly.
and remember, I promised you, if you come work for me, you won't be bored.
I haven't been bored one day in my life
So
since I've been here.
I'm glad I lived up to that promise.
You have.
All right, you two, thanks for joining me today. I sure
Yes, sir.
appreciate it. Okay, this is Leo Daprile. This is the Gem Young Wealthcast, and we'll be back after this break.
Gem Young Insurance and Wealth Advisors, we know every financial journey is unique. That's why our team of financial planners, paraplanners, and service professionals work together to provide personalized strategies for a work optional lifestyle, investments, and risk management. We're here to help you plan for today, protect tomorrow, and enjoy the life you've worked so hard for. Take the first step toward financial confidence. Call Gem Young Insurance and Wealth Advisors at 330-533-6936 to schedule your fit meeting today.
Hey, it's Medicare Jer here from Gem Young Insurance and Wealth Advisors. Medicare can feel confusing, but I'm here to make it simple. With the right Medicare Advantage or Supplement plan, you can worry less about unexpected healthcare costs and focus more on enjoying life. Let's make sure you've got the coverage that fits your needs and gives you peace of mind. Call me, Medicare Jer, at Gem Young Insurance and Wealth Advisors today at 330-533-7941 to schedule your appointment, and let's get your plan in place.
By calling this number, you will be speaking to a licensed insurance agent to answer your questions or provide additional information about Medicare Advantage plans, prescription drug plans, or Medicare Supplement insurance plans. This is an advertisement for insurance.
At Gem Young Insurance and Wealth Advisors, we make planning for your future simple by offering both insurance and wealth management under one roof. Our team helps protect what matters most while guiding you toward your financial goals, whether it's safeguarding your home, health, business, or planning for a work optional lifestyle. With everything in one place, you get seamless support, personalized strategies, and peace of mind. Call Gem Young Insurance and Wealth Advisors at 330-533-7941 today to schedule your fit meeting and experience all-in-one protection and planning.
Now, back to the Gem Young Wealthcast, brought to you by Gem Young Insurance and Wealth Advisors. Once again, here's Leo Daprile.
Welcome back to the Gem Young Wealthcast. This is Leo Daprile. Well, I hope you enjoyed the podcast today. I think Denny and Kim gave you some great insight. So one of the things I always try to do on this podcast is get under the hood and show you how things really work. So I wanted you to have more of a perspective on exactly where we come from and what it is that we have to, the challenges we get from insurance companies, because we know what matters to you. We know what things cost matter to you. They matter to us. So we're always trying to find the best value that we can for you. And we want you to know that no matter what the advertisements out there are saying, we know that the companies we represent are competitive. So going to them doesn't create any more value for you. Actually, we find it to be more of a hassle because we're still a local company. We still have a local service team that understands you. They're all educated, licensed individuals. We have a talented sales team. And if they don't have a professional designation, both sales and service, they're all working towards that. You're not going to get that on the 800 numbers. So just remember what we say to you. If you're going to look other places, make sure you're doing a legitimate comparison. And one of the points Denny made today is so many things that used to be an automatic, especially on your auto and your home policies, now isn't. They're additions to your policy. So they're endorsements is what they're called. That's the fancy word the insurance industry uses. And the reason they're called an endorsement is because they're endorsing a contract. They're not endorsing a policy. So hopefully you found some insight to that and took some of the examples of what we had. We think 26 is probably going to start to get some stabilization in terms of rates. I still think we're going to get rate increases, but they're going to start aligning more, in my opinion, to cost of living raises so that the insurance companies can stay profitable. And let's be honest, like Denny said, you want to be with a profitable insurance company because you want them around to pay your claim. That's important. But we don't want you feeling like you're getting gouged either. So that's why we have the 8 different insurance companies, because every insurance company is going to take a different position on what their profitability looks like. And that's why, since we know you and we have your information, if they take a position that we don't like, then we can easily adjust and look around for you to see if there's something better for you. So there's a lot more to it. So if you're running for price, be careful, is all I'm going to tell you. You've been hearing me say this for years, that there's a lot more to it than just what it looks like in terms of premium. And if you don't understand it, then find an independent agent, somebody like us, that can interpret it for you, okay? And somebody that will give you objective advice. And that's one of the things we do here. And that's one of our mantras of our company is professional advice at a fair value. And we'll tell you if we're not a fit for you. That's important. If we can't help you, we'll tell you. We won't just try to persuade you. So I appreciate you listening today. If you didn't get all of it, check out the podcast. We're available anywhere else you get the podcast. This is also a video. Check it out on our YouTube channel. This is Leo Daprile. This is the Gem Young Wealthcast. And until next time.
At Gem Young Insurance and Wealth Advisors, we make planning for your future simple by offering both insurance and wealth management under one roof. Our team helps protect what matters most while guiding you toward your financial goals, whether it's safeguarding your home, health, business, or planning for a work-optional lifestyle. With everything in one place, you get seamless support, personalized strategies, and peace of mind. Call Gem Young Insurance and Wealth Advisors at 330-533-7941 today to schedule your fit meeting and experience all-in-one protection and planning.
At Gem Young Insurance and Wealth Advisors, we know insurance can feel complicated and overwhelming. That's why our team is here to listen, understand your unique situation, and provide solutions that work for you. From home and auto to life, plus a team dedicated just to commercial insurance, we help protect what matters most without the stress. Don't wait until an issue arises. Call Gem Young Insurance and Wealth Advisors at 330-533-7941 to schedule your fit meeting and get the protection you need today.
At Gem Young Insurance and Wealth Advisors, we believe your financial goals deserve more than just a plan. They deserve a team. From planning for a work-optional lifestyle to managing risk and supporting your everyday needs. Our financial planners, paraplanners, and service team work together to build a strategy that truly fits your life. Planning for the future? We'll help you make that confident financial decisions and achieve lasting peace of mind. Call Gem Young Insurance and Wealth Advisors today, 330-533-6936, to schedule your fit meeting and start building your financial future.
Join me every week where we talk anything and everything about your money. Have a topic you want to hear more about? Email Katie, that's Kayti, at gemyoung.com. You can find us on Apple, Spotify, and the iHeartRadio apps. Until next time, this is Leo Daprile.